So what is going on, YouTube? Quick trade breakdown for Tuesday, February the 23rd. This is a beautiful setup, and I'm going to break down my whole thing that I did from start to finish so you guys can have some understanding of it. I'm up big on my personal account percentage wise, so I'm really grateful. And it's all from simply following the same thing. I think with trading, the most important thing that you want to focus on is you want to keep it simple, stupid. It's a KISS analogy that I love to tell people. It's KISS, keep it simple, stupid. Do the exact same thing, the exact same time, the exact same pair every single day. And when trading becomes exciting, that means you, my friend, are over leveraging. We can't be doing that. So first thing I did is what I do every single morning is I identified my pre-market fundamental analysis for the session. It's very important that you guys understand this. Why? Because this is going to give us a sentiment of what could happen within the market. Now, this application, where I got the screenshot, it is from the CNBC app. You can literally download it on your phone, or you can directly go on it on your on the website. I recommend downloading on your phone, downloading on your iPad. I have it on my iPad, and I get notifications on it pre-market because it's very, very important. Now, when we're looking at articles like this, we want to look for keywords. It's not about reading the whole article, it's about essentially understanding what you are looking at. This is going to help you understand what could possibly high probability happen within the market. So again, don't read the whole article. It's not necessary. We want to look at keywords. Now, for this example, the keyword is rise. It says here Dow Jones drops 200 points as Trump, sorry, my apologies, the keyword is drops. I read that wrong. Dow Jones drops 200 points as Trump raises tariffs, again, sowing confusion. I talked about this earlier with someone else in another video that I sent. The market, whether we're talking stocks, cryptos, indices, forex, it doesn't like uncertainty. It's gonna create bearish movement within the market. It's gonna cause bearish activity. Like for example, guys, this is completely off topic. I know I don't really do a lot of breakdowns on specifically Bitcoin as a whole, but I kind of want to show everybody this essential setup where I was able to capture a beautiful. Oh wow, it's still dropping. It's at 63K. My goodness, I should have kept holding this position. But I caught this nice 1 to 4 risk to reward, and it was all just on something called fundamental analysis. Yes, technicals played a point. We were at a key area where we were having liquidity. We had a retest of a beautiful fair value gap, but the whole point is that I was able to target the nearest level of resting liquidity, which was right here, right at these previous lower lows, right essentially right over, right essentially right here. We had that rejection order at the high. So it's very important that you basically are aware of like key events. And why did this big drop happen Sunday at 7 p.m.? Well, because number one, Trump raised tariffs 15% on basically every country except for Israel, which is questionable and for another topic. Number two, as well, the leader, a cartel leader in Mexico, got killed and is causing anarchy in the United States, in the Mexico, in the whole Mexico country. So it's like chaos is happening, and the market does not like chaos and hates it. Hence why crypto dropped massively, and stocks. Let me go to stocks, dropped massively. This is the 4 hour candle, so bear with it. But it went from 6,910 all the way to 6,821. That's a massive drop. So again, news events cause the market to move. So here it's saying Dow Jones drops 200 points as Trump raises tariffs. Again, sowing confusion. The market doesn't like that. Now, once I essentially had that in place, then I essentially marked up my pre-market article. Now, obviously, I'm gonna pull up my oops, what did I do? I'm gonna pull this out. So obviously, I had my here we go, beautiful, perfect. So obviously, I had my London high marked up here. I had my London low marked up here. So this was giving me an area where I was going to box price in so I can essentially be able to identify my supply and my demand zone. It's the highest point from between 3 in the morning to eight in the morning. The highest point the market was moved to, and the lowest point it was moved to. This is how I identify my supply and demand area where liquidity is resting and liquidity is sitting. And usually price likes to shoot up to these areas, gather liquidity and make its real move either to a continuation or it just drops all the way down. So that's why I mark up these levels, and anything in between this area, I typically like to avoid unless we're rejecting a London high or a London low area to catch a move to the upside or to catch a move to the downside based on the candle printing on the higher time frame. We also have ironically, this is why my markups are very, very key. We have my point of control on the volume profile nearing right where my London high is, and then we have a low or high volume node right at my London low, and then we have a value area high right where my 4 hour imbalance basically is. Now, essentially, whenever you guys are looking at the market, I was talking to a basketball coach recently, and I was telling him whenever you're looking at the market, you want to identify what is the most probable place the price will go to if it breaks this area. So think of it like my basketball players. If I break my defender down and I have my teammate in the corner, I have another teammate on the wing, and I have a center in the bottom of the basket, and I have another guy at the short corner, and everyone's collapsing to me. Every defender's trying to help me because I'm the best player and I'm really good. What is the highest probability the ball could get passed to for an easy layup or easy score, matter of fact? It's literally the bottom of the basket, the center, because it wouldn't make sense for me to throw it to the corner or throw it to this corner or throw it to that corner for the guy to shoot a 3-point shot, which is farther from the basket. Why not just get into the basket, throw a lob, and give it to my big man? He can dunk the basketball, or give him a bounce pass and he can lay up and get an and one, or at the very least get to the free throw line and get 2 free shots. So whenever you're looking at the chart, you want to identify, okay, where is the nearest level price could go to if it breaks this level. So obviously, whenever you're looking at the market, you want to look at where is there liquidity. Now we have two types of liquidity. We have dynamic liquidity that's built like this, or for bearish like this, and then we have still liquidity, which is built like this, which is equal highs and equal lows. And this is lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, etc., etc. So clearly, guys, very clearly, we built dynamic liquidity pretty much all here, right here. And yes, we broke. So if we break this, guys, we're likely going to come down and at the very minimum, take out this area of still liquidity, which is 50% of the dynamic liquidity that's built right here. So you always want to be looking at, okay, where is the nearest level of resting liquidity? We also have a 4-hour imbalance right here that only got filled 50%. So if we do go bearish, a key area that we can target is up here. We also want to be aware of this. Is very, very important. This is why you want to be like a chameleon and be able to adapt to whatever the market gives us, because what if we print a bearish shooting star up here, the market reverses? Where's the nearest level of resting liquidity? It'll be right here. So you want to be ready to basically take your positions from wherever, or even if we reverse and we create a tweezer bottom at these lows and price reverses, this is the nearest level of resting liquidity. And these are massive moves, guys. Like this is from 6,867 to almost 6,900. That's a huge move when it comes to the S&P 500. Like depending on your account size, you can make a serious win. So I want to look for, okay, different scenarios. Again, you want to be adaptable. You don't want to just be a one-dimensional trader like, oh yeah, we're going bearish. I'm only going to take sells. But what if we have a bounce plan, we go back up? You need to be able to identify different scenarios when it comes to trading. It's just like basketball is the best example. I break my defender down. I have options. I break my defender down. I can throw it to the corner, left corner, 3-point shot. I can give it to the short corner, mid-range shot. I can give it to the wing, a wing 3. or I can dump it to my center and you can either dunk it or throw them an alley. Or if I'm crafty enough, I can get all the way to the cup and get a layup, or I could take a mid-range shot, or I could take a floater or whatever. Like you have options. So you want to be diverse when it comes to your trading outcomes as well. At least that's how I was taught, and that's how I operate whenever I'm looking at the market. So now that I have my nearest areas that I'm going to target price in case we do um have a breakout. Let me make this a little bit smaller. Perfect, right here. So if we do go bearish as well, this would be an area of liquidity right here at 6,757, sorry, 6,705. As you can see here, we created a higher low. Here we bounce. Here we created a lower low. And always we touch, and what happens? We reverse. We reverse. We did it three times, giving us almost like an M pattern formation right here, a triple bottom, so to speak, right? So this is a hot area that we could possibly replay to. And if we don't, the nearest level of resting liquidity would be right here, which is still a fabulous move from 6,867 to 6,840. So whenever you're looking at the charts, guys, you just need to identify, okay, if this happens, what is the nearest level of the outcome of that could happen? Now, obviously, whoops, let me take this off. This is how basically the trade played out. So this is the setup that actually happened. Now, what happened? It's very simple, guys. I'm going to break it all down to price action wise and with order flow. So obviously, with price action, we obviously had, let me make this a little bit thinner. We obviously had price rip. Oh, this is too small. No, too small. Let me go to the big one. Yeah, so we had price right at 9:30. You can see here, the time is right here. We had price rip. So when price ripped, we took the liquidity at these highs. Now, originally at the retest of this fair value gap right here, I'm not gonna lie to you guys, on the 2-minute time frame, I got into a buy position right here, and I was in some profit. Now we almost touched this higher low area, which would have been here the nearest level of resting liquidity, but essentially we reversed, and I took a small loss. It was like 6.5, almost 7 points in a loss, which is not that much. Now, essentially, once I once I saw that this was going to be a change of a position when it comes to trading, I was noticing a few things. So number one, on my on my um on my volume profile chart, which is basically this thing right here, it shows me basically we're having a lot of volume being injected by institutions. So we have my point of control and my value area high right at the exact same place. We have a high volume cluster right here. As you can see, this is spiking out all the way over here. So we have a lot of volume kicking in. We have my value area low right here. So that's why basically like I targeted my positions to these lows here. Now, basically, in simple nutshell, for order flow trading, my value area high and my value area low right here is where 70% of the moves occur. And you can see here, specifically here, it was the heartbeat of the move. Now, yes, we did go lower as well, but 70% of the move happened here. So essentially, I was already aware of that. Now, once we had this sharp move down, I didn't want to get in impulsively. That's stupid. An abundant trader thinks like this: the market's abundant. If a move's very aggressive, I'm gonna wait. I'm gonna be patient. Essentially, what I should have done in this position, I took an unnecessary position here that caused a loss, which is not a problem. Now, once we broke and we rejected off of these higher highs on the higher time frame, we created something called a bearish shooting star. If you guys don't know what that is, oopsie. It's one of my favorite it's one of my favorite patterns whenever I'm trading um in the market, and it gives me a general idea of basically of a trend reversal. So a bearish shooting star looks something like this. We have basically a price shooting up, and it's a long wick with a small body. On my higher time frame, let me go on the hourly so you guys can kind of see. You guys can see that we created that same pattern right here. So it's giving me a thought process that we're gonna go lower, that price is rejecting. So on the higher time frame, I'm seeing this play out in live time. So once we break, I want to wait for confirmation. Now we did have a sharp move down right at the retest right here. That's when I got into my position, right at the fair value gap. Now, once price started basically moving and we came back up, I still felt confident in my position because I only got in at a half risk and I re-entered and I got in at my full risk right here. So here I was in two positions. Now, what made me confident for that is we were right at the point of control. We had aggressive sellers, as you can see here, the red coming into the market. We had little to no blue, meaning buyers in the market. This was showing me that sellers were taking control of the market and buyers were getting absorbed. We were having candles print to justify that thesis and that action. Now, as well, to add to that, on the delta footprint chart, I'm going to show you guys right now. We also had the same thing happen as well. So I got in right here in this candle. So what made me get in? Even though we printed a bullish candle, we had a single imbalance here. We had negative 1.5 million contracts executed favoring sellers. This was showing me that institutions were pumping sells into the market. On the next candle, we had a negative 3.35 million contracts executed favoring sellers. Aggressive orders here based on the dark color. Buyers weren't really active. And then we had a negative 10.6 million contracts executed favoring sellers. We had a stacked imbalance here. In simple nutshell, for people that don't know what that means, it just showing me aggressive sellers are into the market. Whenever I'm looking at this thing called the footprint chart, I'm just seeing what's happening within the single candle. Think of it like a game of tug of war. Think of it like a game of like seesaw. If someone weighs 300 pounds and someone weighs 160, there's an imbalance. The person that's heavy is going to make the seesaw go like this, or if they're on this side like this. So this is something called imbalance, which shows us who's really in control of the market. Order flow in the delta footprint, this is order flow trading. It shows us why the move is happening before it actually happens. It shows us what's happening, because if you're just relying simply on price action, there's nothing wrong with that. The only Achilles heel, so to speak, is that you're essentially watching the move occur and everything's happening and you're waiting for it to happen. So price action candlesticks are just showing things that already occurred. Order flow footprint chart and the volume profile is showing things happen in live time. Now, yes, order flow and the footprint chart had its flaws. We have spoofing. We have the iceberg analogies that fake orders come in that could fake us out. And it's normal. It's happened to me before. But utilizing the delta footprint, I could see we had aggressive sellers coming in. I could see the amount of orders coming in and who is generally in control. Then after that, guys, at this point, once I got in at 950, right here, basically 950, I was already up from 6,888. I was up about 6,864. So roughly 20 points. At that point, I already made back what I lost, plus 12 points in profit or 13 points in profit. So I ended up closing my position at a 1 to 3 risk to reward. Originally, my first buy position was a 1 to 11 risk to reward, which it happens, guys. We take losses here and there, but I was able to manage my risk, which is the most important thing. So that's a quick breakdown, guys, of the position that I took this morning. Very simply, again, guys, fundamental analysis had the Dow Jones printing, not Dow Jones, sorry, had the article say Dow Jones drop. That's the keyword drop, showing me that things are going to drop down. So that's what you always want to be focusing on whenever you're looking at these articles. Pre-market as well, I marked up my London high, my London low. I identified my strong supply. Let me actually go back here. My supply and my demand area. I had my point of control aligning perfect with my areas. I had my value area low aligning with my London low, and then I had my 4-hour imbalance aligning very perfectly with my value area high. Which again, guys, if you understand what I just mentioned, order flow trading, 70% of the moves happen here because this is where institutions deem price as fair value, where they can conduct business fairly while one is not overly powered than the other. And then from there, we have the aggressive orders coming in and we're able to kind of see what's happening. I marked at the nearest level of resting liquidity, which is right here, and then right here. And then, of course, if we did reverse, it would be here. And if we did reverse down up here, it would be up here. So again, I marked that up clearly, very smoothly. I already knew what I was looking for. I had my game plan set in stone. And then essentially on the price action chart, we had a clean rejection of these higher highs. We had a beautiful area where we could retest, which is this fair value gap. We tapped it once, went down, came back up, tapped it twice. I re-entered full risk level, and the whole thing just melted, targeting my value area low. And then essentially on the delta footprint, we had aggressive sellers showing their cards here, here, here. We had a stacked imbalance there as well. And then there and there, we had a lot of aggressive orders. You can see that the reds are very dark colors opposed to the greens. The greens are very light greens, which is showing me that not a lot of aggressive buyers were in position on this trading day, which kind of just showed me that, hey, price is going to melt and price is going to have a bearish day. But that's literally the setup, guys. That's how I was able to capture a 1 to 3 risk to reward on the day. This was a 13-point win. I lost my first position at about 6 points in a loss, but I made it back with a 20-point gain, which would have gave me about a 13.6, basically 14-point win. Nonetheless, I made back what I lost plus another 1R multiple, which is basically what you want with trading. And again, guys, simplicity is everything. I know this might seem kind of difficult. I know this might seem like a lot, but when you put time in the charts, when you understand what you're looking at, when essentially you're looking at things in a simplistic, systematic way, trading becomes easy. I think a lot of people screw themselves over because they overcomplicate everything and they just like they jump around from strategy to strategy, stick to one thing. I first was consistent with price action. Then after price action, I added order flow to my strategy, and then that kind of just helped me out with everything. And the most important thing, guys, is that whenever trading becomes exciting, you're over leveraging and you're doing it completely wrong. Hopefully, guys, this video brought you some value and you're able to kind of understand why I took this position and what I was thinking in my cognitive mind and how I was able to execute this with the utmost confidence. As per usual, as I always say, all credit goes to God because without him, nothing is possible. No matter if I won this trade, no matter if I lost this trade, always all credit goes to God because without him, nothing is possible. I'm extremely grateful for my vision that I'm able to see these charts. I'm extremely grateful for the skill set that he has blessed me with, guys. God bless you a ton, guys, and I'll see you guys on the next video. Let's get it.